All right, I'm going to change gears and connect with Anurag Singh. He joins us. Anurag, Prime Minister Modi's visit to United States this week. What is the relevance of that? What is the importance of that?
Yeah, Nikunj, morning. Nikunj, I think ultimately it's just meeting of minds. I think Prime Minister Modi and both Trump, I think they just want to get on a same page that look, India is not a target here in terms of tariffs or any such policy. India is actually a beneficiary of Trump administration. Much of the business circles believe this. So I think it'll only be a matter of just getting an alignment that nobody speaks out of turn. Let's not get into this narrative and comment unnecessary commentary here and there. And because India is largely a services exporter, so I think it'll just be getting this firm commitment that Trump will get the kind of support he needs wherever, and he can count on India. And I think same, it's just comforting that India is really targets for Trump is China and European Union. India is really overall a net beneficiary. So I think it'll be a good meeting, and India has really nothing to fear. In fact, India has all to gain with under the Trump administration, and I'm really confident that that's the message that's going to come out of this.
What about the equity markets? Bereft of course, the PM's visit, that's news flow that we are going to react to in any case. But other than that, does it seem like at least the poison is out of the system? While the big swing and uptick may not have come in, so to speak, but at least we seem to have stabilized for the last 2 weeks.
Aisha, Indian market, you're saying, right? Yeah, yeah. So, no, Aisha, I think FII money will continue to get pulled out. And rather, I'm surprised why this quantum is so low, because one, there is a depreciation of rupee which is pending. So I think there is that 4 or 5% more to go on rupee, right? That is one. Second is eventually it's not that nobody's really pulling money out of India only. It's whole 80% of the funds are active funds, and they're all trying to on the margins pare down the stake in emerging markets, right? Collectively, the story is well known that last 10 to 15 years, emerging market as a basket is like 3 to 4% returns, right? That's not good. So ultimately, I think this is going to be a headwind, at least in 2025, that emerging markets will see lesser allocation. I mean, of course, it will depend on how the interest rates behave, but collectively, I don't know. My sense is that money will continue to get pulled out, which is okay, right? Which is fine. Money will come find a way into unlisted space, but money will get pulled out from the listed space. Which is how it goes, really. Aisha, that's my view. I might be wrong, but that's how I tend to think right now.
You're sounding bearish to me. Very bearish. The rupee will depreciate, FIs will flow out.
Yeah, yeah.
But
No,
I will
because it's
also
not.
I will also remind everybody to say that where will the money go? If it goes
Yeah,
in US yield, I don't think it
yeah.
makes sense to buy into US yield when we know that it is on a precipice of getting challenged by the bond vigilantes.
No, no, so true. So look again. So Nikunj, we live in a relative world. If 10-year yield is 4.5 and Indian 10-year yield is 6.5, we know the story there, right? The second story is that there is a depreciation of rupee pending. So ultimately, if the result is going to be 8% return, why to chase 8% return into equities? That's the second story. The third story is that collectively, which I told, that emerging market as a basket, if it doesn't do well, then there's going to be less of saying that, oh, people talk about it that we should be in India because that market is doing well consistently. But it's on the whole, if the basket money is being pulled out, India will be also be a 20% recipient of that, right? And fourth is this whole, Nikunj, the whole market has moved to the unlisted space. Collectively, there is a by the way, there's one more story. The philosophy is that if you are invested in these mega tech companies, all the mega cap seven stocks in US, 50% of their earnings come from rest of the world. So that's a diversification enough, right? So all these things combined, there's a bit of a rethink going on in terms of collective emerging market basket, not specifically India, right? India might continue to do well, right? But I mean, now is not the time where the money will just open floodgates. So at least it might be net negative. That's how I sense. Yeah.
Anurag, great to have you on the show. Good chatting with you as always.
Thank you.
Okay,